SoftBank Group Corp., the Japanese investment powerhouse led by Masayoshi Son, is reportedly in advanced discussions with a consortium of banks to secure a margin loan of around $5 billion, using shares of its British chip design subsidiary Arm Holdings Plc as collateral. The report, first revealed by Bloomberg News, signals SoftBank's intent to leverage one of its most valuable assets to strengthen liquidity and potentially fund new strategic ventures or manage existing debt obligations. According to people familiar with the matter, the discussions are still ongoing, and the final structure, size, and timing of the loan could change depending on market conditions and negotiations with financial institutions. Banks involved in the talks include some of the world's largest lenders, many of which have long-standing relationships with SoftBank. The transaction would represent one of the largest margin loans ever backed by a single corporate equity stake, underscoring both the scale of SoftBank's holdings and the financial weight of Arm's recent market resurgence. Arm's soaring value fuels SoftBank's leverage. Arm Holdings, which designs semiconductor architecture used in nearly every smartphone chip globally, has become SoftBank's crown jewel. After Arm's blockbuster IPO in 2023, the company's stock price has surged amid growing demand for energy-efficient processors and artificial intelligence (AI) applications. The market capitalization of Arm has climbed beyond $120 billion, making SoftBank's roughly 90% stake worth well over $100 billion. This dramatic increase in Arm's valuation has given SoftBank a powerful financial lever. By pledging a portion of its Arm shares as collateral, SoftBank can raise significant capital without having to sell down its stake or dilute control. Analysts view this move as a strategic way for Masayoshi Son to tap into Arm's rising value while retaining flexibility for future investments, especially in AI-related ventures, a domain Son has repeatedly identified as central to SoftBank's long-term vision. SoftBank's debt and liquidity challenges. The potential $5 billion margin loan comes as SoftBank continues to manage a delicate balance between bold investment strategies and high leverage. Over the past decade, the group's aggressive bets through its Vision Fund have yielded both massive windfalls and painful losses. SoftBank's exposure to volatile technology sectors has led to swings in its financial results, and the company has been actively seeking to stabilize its balance sheet amid global economic uncertainty. By raising new liquidity through an Arm-backed loan, SoftBank could gain greater financial flexibility to service debt, invest in growth companies, or repurchase shares. However, margin loans of this scale also introduce risk. If Arm's stock price were to fall sharply, SoftBank could face margin calls requiring it to post additional collateral or repay portions of the loan. This makes the timing and terms of such financing crucial to minimizing exposure. Market reaction and strategic implications. Investors and analysts are closely watching how SoftBank structures this potential loan. A large-scale financing backed by Arm stock could indicate renewed confidence in Arm's long-term value trajectory, particularly as AI chip demand accelerates. On the other hand, some analysts warn that it also signals SoftBank's limited appetite to sell Arm shares outright, suggesting that the group sees greater future upside. Masayoshi Son, known for his ambitious and high-risk strategies, has largely stayed out of public view in recent months as SoftBank focuses on repositioning itself as a key player in the AI revolution. Son has hinted at plans for a massive push into AI chip development and infrastructure investments, and a multi-billion-dollar credit facility could provide the cash reserves necessary to execute those ambitions. Arm's role in the AI boom. Arm's unique chip architecture has become increasingly relevant amid the global surge in AI computing. Unlike traditional chipmakers such as NVIDIA or AMD, Arm's designs are licensed to other manufacturers, allowing for broad adaptability and efficiency across devices. The company's power-efficient models have positioned it as a key player in the development of AI-enabled smartphones, edge devices, and even data centers. SoftBank's strategy to use Arm as a financial springboard aligns with its long-term view of technology cycles. With AI demand fueling both hardware and software ecosystems, SoftBank sees Arm as central to its next phase of growth, not just as an investment asset but as a technological cornerstone for the future. A calculated financial move. If completed, the $5 billion loan would mark one of the largest financings backed by a single tech asset since Elon Musk's Tesla-related margin loans and similar deals involving large private holdings. It reflects both the global banking sector's confidence in Arm's market value and SoftBank's enduring ability to secure capital on favorable terms despite a sometimes volatile financial track record. Ultimately, this potential deal highlights SoftBank's evolving strategy under Masayoshi Son, balancing visionary investment in transformative technologies with pragmatic financial engineering. Whether the funds are used to fortify the company's balance sheet, invest in next-generation AI ventures, or fund share buybacks, the move underscores Son's ongoing reliance on Arm as both a financial asset and a symbol of SoftBank's enduring technological ambition. Bloomberg. The move could strengthen SoftBank's liquidity, fund AI investments, and highlight the growing value of Arm amid the global semiconductor